Good afternoon, everyone. In today's video, we're going to do a deep dive into a particular trade in the stock volatility box, which was in Shopify. Now, Shopify hit our live scanner multiple times. Once at 7:20 a.m. Pacific, and then one more time at 7:40 a.m. Pacific when it had breached outside of even our aggressive volatility box clouds and into our conservative volatility box. So the live scanner continuously tells you every single minute of the market action where price action is breaching our volatility box lines, and that's how we found the trade in Shopify. So now, if you prefer to say get these levels quickly, you can come straight to the dashboard, type in Shopify, and we have the levels available, both aggressive and conservative for Shopify, available right here. The LE is our long entry, and the SE is our short entry, and then the ST is our short target, short stop, and then long stop, long target. Now you can also toggle the switch if you'd like to go to our conservative models if we have breached our conservative volatility box, or for those of you that like to say see this visually on a chart, you can come in and generate an actual thinkorswim file with both the aggressive and the conservative volatility box studies, which you can directly import into thinkorswim. So now if we head on over to the trade, we'll show you the actual setup. All right, so here we have our aggressive volatility box plotted on Shopify, and let's start with the aggressive models first. So at 7:23, when price breaches the aggressive volatility box, that's when it comes onto our live scanner page, right? That's the first indication, your first hint to, hey, Shopify is interesting right now. Let's go look at it as a potential setup. So now coming to our charts, we're then looking for a reversal signal with our edge signal in a bearish direction, right? So we keep waiting, and at this point, we're waiting for that red arrow. If we keep cycling through, Shopify ends up breaking outside of our aggressive volatility box before giving us that edge signal. That then becomes a sign of, hey, no trade using the aggressive volatility box, but we are still waiting for Shopify to now trigger off of the conservative models, right? There's a reason why we have two. It gives us a way to still participate in the market, especially when Shopify is breaking outside of its normal price action. So now if we load in our conservative volatility box as well, so we'll hide the aggressive one and let's turn on the conservative one. We now see the second time in which Shopify breaches the conservative volatility box, and at this point is when it starts to enter onto our live scanner page for the second time. So once again, we're waiting now for an edge signal confirmation. Let's keep going through this by each 1 minute candle bar. So if we keep forwarding forward, this bar is the first bar in which we actually get that edge signal confirmation, and at this point the trade is now valid. As long as we get an opportunity to re-enter at the clouds or better, that's a valid trade before we hit either our target or outside of the volatility box clouds, which would be our stop. And so now in the subsequent bars, if we take a look to see what happens, we get price reversing back into the clouds. We face just a little bit of heat, but really now if we start to zoom out, this is where our signals gave us the opportunity to get inside of Shopify. We had multiple opportunities to get in once we had the edge signal at the cloud or better before we saw a flush down lower, and then a quick retest not breaking the previous high before we saw a really nice flush down lower in Shopify. So to give you an idea of what this move is, to our first target, which is just this gray target line, that was only a move of about 0.4%, right? It's a small place, but it's a place where you can start to pay yourself, take your money off, and the ultimate move that you got in Shopify from the point of entry was a total of 3.5% based on if you were able to hold into the end of the day. Now, of course, this is a very perfect scenario, but this is to say that you had a very low heat trade overall in Shopify, a place to enter at the edge, and one idea that a lot of folks have started using, especially with options and in a candidate like Shopify, which is too expensive to short, not a place where you really want to short the naked shares, but still too expensive to buy the straight out puts, is to start using verticals to start to use the closest date to expiration premium and have that premium erode to skew the risk to reward in your favor as well. So that's something like a call credit spread where you see that the calls with the 1 day to expiration are really liquid. Now, of course, once you put on that options trade, you are risking the capital you put on at risk, but oftentimes you'll find that that's cheaper than, say, shorting 100 shares of something that's high risk like this, and you get the benefit of having time decay in your favor, along with a really nice move in the actual direction that you were hoping for price action to go. And for those of you that are Fibonacci enthusiasts, you can also use the retracement tool to draw our retracement from our low to our high, and then use the actual retracement levels to try and use areas of potential target where you expect price to go after we break our gray target line, right? For your T2 and places to take off your contracts if you used options or take off shares based off of whatever asset class you ended up using. But this then gives you some concrete levels using your low and your high at areas where you can start to take off some profits, right? And in the case of Shopify, we see that price fell into your 382, bounced from here back to our target line before then hitting the halfback level. And really after the halfback level, you then made your next stair step move down to your 618 retracement off of your bearish zone. And if you are using this as a longer term trade, you can then also use the 1272 and the 1618 as potential areas of targets for your swing trade entries, and start to use each subsequent day's volatility box to start to peel contracts off. So hopefully this gives you an idea of not only how to use a day trading entry to turn that into a swing trade, but just the mechanics of the trade and also when and how to enter the trade based off of a breach along with our edge signal confirmation. All right, hope this video helps. Take care, everyone, and good luck trading the rest of this week.